Hey traders, Todd Gordon here with TradingAnalysis.com. This is CNBC's Trading Nation. Traders, we're going to take a look at crude oil. It's come a long way in a short way, but I think the run is about over. So USO is the ETF that tracks crude oil here. And as I scroll out here a little bit, you can see that the market is moving into technical resistance. So if we were to connect the most recent highs, you're going to see that crude oil's got some overhead resistance or a ceiling to contend with right at about the $10.75 mark here in the USO. So as we zoom in a little bit here, again, that trend line is going to come in right just above our current levels, just at about, as I said, 1075. Okay, so that's going to be resistance. We could further fortify that with something called a Fibonacci retracement. So these guys are certain levels that corrective swings will recapture of the prior trend. So the trend is down in this case. So the market is now correcting against that downtrend. So there's several of these retracements that we can use to identify the potential end of this correction to the prior trend. The most recent retracement that was or is being tested is the 61.8. That's kind of the key Fibonacci retracement level, about 10.56. And then as I mentioned, the one just above, 10.82, that's going to correspond with the downtrend line from the higher time frame. So you're getting a cluster of resistance just above us at about 11 bucks in USO. So the trade I want to do here in crude oil to take advantage of this is I want to go out to the June 9. These are the weekly options that expire June 9th. I'm going to go ahead and buy the 11 put. Sell the 10 put. We're just looking for a little bit of a move down, not too significant. We're going to pay 43 cents for this trade, or $43 per option spread that we're trading. That is going to be the max risk. Our break even on this trade is going to be the long strike, which is the 11 put minus the premium paid, which is about 43 cents. So your break even is going to be right around $10.60, and then above 1060, or I should say below 1060, as the stock is dropping, your profits will accumulate as you get up to that short strike at the $10 mark, and then you'll be capped out at a gain of about $57. Okay, so a positive reward to risk ratio on this USO trade. So I'm going to go 43 cents right at the midpoint, and we're going to send that order in. Guys, we're going to use the standard 50% give back rule for these debit spreads. We just paid about 43 cents to get in. If the premium remaining gets cut down to about 22 cents, let's go ahead, hit the eject button, contain your risk, simply move on to the next trade. Otherwise, we're leaning against the upside resistance in crude oil in order to take advantage of a little pullback against that overhead ceiling. Okay, guys, that is it for crude oil. This is Todd Gordon with CNBC's Trading Nation. Be sure to follow us at Trading Nation on Twitter for updates to this trade as well as all the other positions our traders are working. And we'll see you guys in the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.